Shall we move to? Let's go to the smaller company called Microsoft, which is, gosh, been having some. I think they were a high of 550. I mean, I think
555.
Wow. I think on Friday they did close back above 400 or no?
401.
401. But they did. I think they were down like 380 or 390 or something this past
I
week.
think I saw it. It was like 393 or something. Oh, actually, the Friday day range, the low is 392.
Oh, okay. Well, let's see if it's a buy, sell, or hold here. We're talking about Microsoft. Their symbol is MSFT, the software infrastructure. Shares float very low, 0.7%. 76% institutional owned. So it means about 24% of people actually hold the stock themselves. PE ratio, 25.1. That's not great, but the industry is 34.8. And this is kind of a software company. I mean, I think they're feeling the pain there. Price to sales, 9.8 versus 5.6. That's expensive. Price to book value, 7.6 versus 7.7. And price to cash flow, 18.7. Industry at 20.7. Now, the PEG ratio for Microsoft is 1.6 versus 2.0. We do see the earnings over the last year are up 28.8% for Microsoft versus 25.5% for the industry. Sales declined by 16.7% versus 16.6%, about the same as the industry. That's positive. The 5-year earnings per share growth estimate from the analyst, 14.9% for Microsoft, better for the industry at 18.6%. We do see Microsoft pays a 0.9% yield using 21% of their earnings to pay that out. And then looking at the balance sheet here, we got a current ratio of 1.4, better than the industry at 1.8. Debt to equity only 0.2 versus 0.7, so they managed to keep their debt in check there. Net profit margin, extremely good, 39% versus 17.1. Return on equity, and I think they have low equity if I'm not mistaken, but 30.5 versus 30.6. And the free cash flow number, 77.4 billion versus 46 billion for the industry. So they're doing pretty well on that, but I know they're having some troubles, which we'll talk about just a minute here after looking at some other numbers.
Yeah, so current price here for Microsoft, it's $401.14. 52-week range, I talked about the high of $555.45 and the low, $344.79. Year to date, the stock is down a little bit over 17%.
It's not been that long. It's only a month.
A month and a week. Yeah. Going forward, though, this is kind of where the disappointment lies. Even with the big pullback that we've seen going out to June 2027, estimated earnings per share here, $18.87, gives us a target sell price of $313.24. So it is still trading at over 20 times those future earnings.
And I see that the analyst did increase the estimate from $18.51 to $19.04. So that's an increase about 2.8%. But I think that's going to be changing. There's some negative news that I've heard, like I think it was an event that they did, and I believe they had room for 15,000 people and only 5,000 showed up. There's other things that are kind of bruising Microsoft's reputation right now.
Yeah, I mean, the numbers were actually pretty strong for the quarter. When you looked at it, earnings came out at $4.14. The estimate was $3.97. But, I mean, the things that are concerning with Microsoft, and this is kind of a positive negative, right? There is their commercial backlog now stands at $625 billion. Well, that sounds pretty darn good, right?
Yeah.
45% of that is tied to OpenAI. And OpenAI has all of these outstanding commitments. And I could be totally wrong here, but there are now question marks. How the heck is OpenAI going to fulfill all of these commitments when they don't really have that much revenue yet?
Right.
And you have all this competition out there. You know, Anthropic has really been growing in popularity, really been growing in their quality. I mean, we talk about, I hate to say it, but China's AI chatbots and so forth. Can OpenAI fulfill all of these contracts? If not, that is a huge, huge hit to the excitement and the backlog that Microsoft has. We also talk about the capital expenditures. You talked about how good free cash flow is for Microsoft. Is it going to stay that way? When we look at it, the company spent $88 billion on capital expenditures in the last fiscal year. Well, currently they're about halfway through their current fiscal year and have already spent $72 billion on capital expenditures. Wow. So we've seen this huge ramp up, which it hurts free cash flow. And what happens, we've talked about this before, it's not a direct impact on earnings because you're depreciating those capital expenditures. But the problem is you keep spending. All of a sudden, after 3 years, now you have all this backlog and depreciation expense that is going to be hitting the income statement. So they have to see a return. Otherwise, those expenses are going to climb and climb and climb, and it's really going to hurt that earnings growth.
I think another problem I saw when I read about them, I believe the co-pilot said, "Oh, I think we got, correct me if I'm wrong on the numbers, like 15,000 subscribers."
15 million.
15 million. There we go. That sounds better. 15 million.
15,000 would be terrible.
Yeah, it would be terrible. 15 million subscribers. Sounds like a big number. But I think their total subscribers that they have for their programs and everything else is like, isn't it like over 400 million?
450 million, yeah.
Yeah. So that's not a very good percentage. It should be, you would think. And it's, Copilot's been out for a couple of years, I believe.
I mean, that was kind of, the excitement. Oh,
Yeah.
they're really an AI. They have this. And, they still have their, and again, I don't really fully understand it, but obviously their hyperscaling business with the cloud and the data centers and the data servers and so forth. They still are, I guess, a benefactor of AI that way, but the Copilot was really supposed to be this big, exciting thing, and it's been I'm going to call it a lackluster rollout, to say the least.
And from what I've heard, and again, we don't own Microsoft, so we don't follow it. I don't think I've heard anything that is going to change or anything like, oh, we're going to do this to change it. I think they're having a difficulty with that.
I believe so as well, and I don't know. I mean, we've talked about this many times, but it is still just concerning, obviously, all this capital expenditure announcement that continues to happen. I mean, it's great for some businesses, but how sustainable is it? These hyperscalers, when you look at now Meta, Amazon, Google, Microsoft, it's now estimated that they could spend around $660 billion combined this year on Capex. I mean, I don't know how you continue to do that and how all of them see a big return on investment. Some of them might, one of them might, but all of them, I still don't know how that comes to fruition.
So even the pullback from 550 to like 400, still not a buy.
Yeah, and that's the thing too. Obviously, we sound super negative on Microsoft, right? It's like, oh my gosh, these guys, we hate Microsoft. No, that's not the case. But with a valuation still at 20 times those future earnings, yeah, I don't think it's really has that risk adjustment baked in yet. If this thing fell to 12 times earnings, I think I'd be all over it, but it's still not there yet.
Yeah.